I'm Charlotte McLeod with the Investing News Network, and here today with me is Chris Vermeulen, Chief Market Strategist at thetechnicaltraders.com. Thank you so much for being here online with me again.
Yeah, thanks for having me, Charlotte.
Great to have you here once again, and we're going to start off by talking about gold. We are now about 11 days into August, and for gold, it's been kind of a rough month so far. It started above the 1800 mark, and the last time I checked, it was down around 1750. It has been a little bit lower than that. So let's get your perspective on what's going on here with gold and what's been driving it to those lower prices.
Sure. Well, I can share my chart and give you a quick peek of how I'm seeing this market. And if we take a look at the daily chart of gold, which you should be able to see there, what we're looking at is we've had this big washout low this morning, or not this morning, but this week in gold, where we saw gold go all the way down to roughly 1680 a share in pre-market. And that to me, I think is a pretty big washout move. Now, there's a couple really important things with the price action that gold took this week. First off, if we were to use technical analysis using a Fibonacci extension tool, this is going to tell us, based on the previous moves in the market, where should it move to next? And so if we were to look at where gold went, we can go from the high that we saw back here in I think it was the first day of June, down to the sell-off in June, and then this reaction high. And this little indicator is going to tell us where gold should be in terms of the next downside target. And when we look, the 100% measured move, this little green line, this one here, means there should be enough momentum for it to come down to that green line. And it pretty much did. Because there's a previous lows over here just before that, that is acting as a support level. So buyers stepped in during that sell-off we saw, bought the market back up. And now we're seeing gold have a little bit of a bounce. But more or less, that sell-off actually brought gold down to a very strong support zone. And if we were to zoom out on the chart just a little bit more, we can see here, if I was to just draw a little bit of a support zone across here, this is a very, very critical pivot zone in the market, meaning if price is below it, it acts as resistance. If it's above it, it bounces off of it. You can see how it bounced off it again earlier this year, came back down this week, hit that level and bounced. So this is a really critical level for gold, and this could be a very big bottom. I mean, we saw panic selling in gold yesterday, the day before, and that to me is a sign that gold is actually probably putting in a bottom here. So as long as it can hold that 1700, 1680 level, this is a good opportunity for long-term investors to be buying gold.
Right. And so it looks like we do have some support for gold here. Is there a chance, though, that it could go lower? And what would that look like for you?
It could go lower. If it was to break this level, we're probably going to see it come down to the next, just a simple whole number measured move. So a whole number is typically 1600, 1700 is a whole number, 18, like these are decade numbers or century numbers here. And typically what that is when price is falling and there's fear in the market, there's going to be investors that say, hey, when it hits 700, I'm going to buy it. And then if it breaks 700 and closes below that, the next level where typical investors are going to say, well, if it gets down to 1600, I'm going to buy it. So that's generally going to act a bit of as a support level. But if we go back in time, we can see over here, it acted as a very critical support zone before it rallied and put in a huge move. It also acted as support over here, resistance and resistance. And so this is going to be another critical pivot zone in gold. So that would be the next level down, that if this breaks, we might dip down and see that 1600 level hit, which should also act as a support level, at least for a bounce for a couple of weeks. But that would be the next downside move in gold.
All right, so we do have gold a little bit out of favor here with its price on the decline for a little bit. Where are people going instead of gold? What are they looking for right now that gold can't give them at the moment?
Yeah, it's tough. The market this year has been really choppy. When you look at the Russell 2000, which is kind of telling us what the average investor is thinking and feeling, if we were to look at this, we've seen this year, mostly the Russell 2000 trade sideways. And this is the average investor. They don't know where to dump their money right now. We've seen, a lot of just sideways chop in most sectors. And the markets, when you look at the large caps, they are inching their way higher. Here's the SPY, which is the SP 500. These are the large cap stocks. We do continue to see people just moving into the stock market in general, the large in tech companies, where that's where the average investor goes. They want to buy the big brand names that they know of. And so we are seeing the stock market go up and to the right. If we were to look at all the different precious metals, you'd notice they'd all be going down and to the right. So there's just flow right now where people are still migrating to the risk on the equities and not so much into precious metals. Now, everything always, is going to have a yin and yang. There'll eventually be a point where we see the stock market start to chop around, and we'll see money probably go into precious metals and start a big rally. But right now, people are still slowly going into the large cap companies. And if the Russell 2000 breaks to the upside, I think we're going to see a very big run in the stock market. And gold may still underperform a little bit because money is going to be looking for those stock plays temporarily before they get back into gold.
Right. And speaking about the overall stock market, definitely within the precious metals sector, you hear people speaking a lot about the stock market reaching perhaps unsustainable heights right now. What are your views there? Because it sounds like you think it could continue on upward for a while.
Yeah, I do think that. I mean, the market could have a very sharp correction at any point. I think we're looking for potentially a 5 to 15% correction in the SP 500. Now, with that said, if we were to look at the Russell 2000, which is a great leading indicator, it's generally telling us what the masses are thinking. Well, we saw a really big run late last year to early this year, about a 63% rally. It's been consolidating in this big pattern. And if we were to just take a measured move to figure out using Fibonacci extension where this momentum is carrying things to, we can get a gauge of where this market is headed next if it breaks to the upside. And as you can see, this 100% measured move brings us up in the Russell 2000 all the way up to 300. Now that is a roughly 30% plus move to the upside. That means we could see a lot of money move into the stock market. We could see a lot of investors really pile in to the to stocks in general. And we might see gold and silver and miners kind of flounder and trade sideways down at these lower levels for another couple of months. There will be a point eventually, though, where investors all pile into the stock market. I think this could be a very strong move, and it'll be that what you just said, that it'll take the equity curve up to such a steep angle for the SP 500 and the NASDAQ that it'll be kind of a euphoric blow off top phase. And when we get into that euphoric phase, we're going to be able to see that pretty clearly on the chart. We'll also be able to tell by the spike in volume. But then we should start to see precious metals come to life. That's when precious metals and the miners really become a leading sector. And they'll rally with the stock market. But then when the stock market starts to top out, potentially in a few months, several months from now, those gold miners can really take off. And that's when they will just keep going higher and higher, potentially hundreds of percent, while the stock market is actually chopping sideways and actually putting in a top. So there's going to be a really big price action, I think, over the next 4 to 8 months. All this, I think, is going to start to unfold, and watching that Russell 2000 break out to the upside and watching volume take off where investors finally throw in the hat. They say, I am done watching this market. I'm missing out. I need to get in. Another push higher, I think, is going to get all those conservative investors back into the market and create that big surge. That final last bit of money that's not in the market is going to get sucked in right at the last minute. And that's the most dangerous point to be investing. But that's just how the markets work.
Right. So we talked a little bit about gold's near-term downside potential. What does the upside for gold look like as we head into the rest of 2021 for you? How high could we go?
Right. So I think there's potential for gold for 2021. I think we get back up to 1900. Potentially we get back and flirt with the $2,000, maybe back up here. There's a lot of work that needs to be done with gold. It is way down here at support. It has to get back up and break 1840. It's going to be a very significant resistance area. And then it has to get up and really close above this 1915 area. So there's a lot of work to be done just for gold to kind of put in a rounding formation. It'll kind of work itself up. This is going to be a pretty major line in the sand here around this 1900 hole level. And then from there, I think we could start to see potentially a really big move come into play. But, I think it's going to be a stretch to see gold back up at 2000 by the end of the year. I think it might be flirting with 1900, 2000 range. But it's going to probably take the rest of the year for gold to find support, start to build a little staircase of price action moving back up this chart. There's a lot of repairing that needs to be done, that it's going to work itself back up. And that takes months. As you can see down here, each of these vertical lines, are a month. We got a month. And so we're looking for several more months, 4 or 5 months potentially, for gold to work itself up. And then we could see it really start to take off and get traction with a huge euphoric kind of move in the stock market. And that's really favorable for the metal sector.
Right. And of course, patience is always the hardest thing. That will be something to look forward to.
Yeah, it's tough. No one wants to be waiting for trades. They always want to be in trades. They want action. But the reality is, most sectors have just been chopping around this year. The Russell 2000 shows that. You can get into the big tech and the leading indexes, but they have been grinding. When you look at this chart of the SP 500, it is a very, very tiny little range that has been going higher. It's not like we have big volatility. So it's just tough to make money in the market right now, as it's just kind of inching its way higher.
For sure. And you mentioned briefly the gold companies themselves. How are they looking to you from a technical standpoint, especially as compared to gold and metal?
Yeah, well, gold and silver miners are down, kind of testing these lows. They have a very similar chart to gold. They're down near support. They're getting pretty oversold. Again, they've got a lot of work to do. They've got to claw their way back up, really break this. This is GDX, so the large caps. They got to break 35 is going to be a pretty significant area. And then the next major one will be around $40 a share. It's a long ways from where we are. But this is a very big downtrend, and it's going to take a long time for this to reverse. There's a couple different support levels to the downside if price was to break down. But again, if gold does start to firm up and found a bottom this week or this month particularly, then I think we're going to see it back up to this 40 level, maybe a little beyond there by the end of this year. But at this point, metals and miners are still in a downtrend, and unless you're into bottom picking and you're a long-term investor who's, happy holding on to big drawdowns, you really should just I'm staying clear of it for now until it's got a brand new uptrend and all the signs are there that it's firing on all cylinders. So this is kind of a bottom pickers type of market where it's down at support. Gold and silver are at support. This is an area that you could move into, but just keep in mind the trend is down. It's still more likely to continue to go lower until we're proven wrong, until a new trend is confirmed to the upside. So it's just got to let it mature. It's still in a big bull flag long term. When you look at the monthly charts and things, it's still much higher for gold and miners. But right now, they're just a kind of a neutral play, really.
And looking over to silver, it's been an interesting year for the metal with all the momentum it saw at the beginning of 2021, which is dissipated by now for the most part. What are you seeing for silver as we look forward?
Yeah, silver's had much of the kind of a similar type of move as gold with that washout low that we saw. We've got silver came all the way down to roughly the 22 area, which is a very significant support level back in time. And it's bouncing from that level. More or less, silver has been holding up a lot better than gold. Silver's more or less been kind of range bound in this area. And of course, if something is range bound, you can accumulate near the lows, trim your positions off as it moves up and close them out near the upper end of the range. And so there's opportunity, I think, in silver. It's at support, just like what gold is. And there's room for it to move up at least to the halfway point, potentially to the upper end of the range. But until it really breaks out and has conviction, not this type of move. This was that everyone trying to create a short squeeze in the media. These are just pops and drops. That's what always happens. We need a real confirmation, a weekly close, not a one-day kind of wonder type play. But overall, silver's at support. Until it breaks out of this blue box, it is still kind of range bound, and it's you really got to be patient because this could last out for several more months as well.
Okay, now you mentioned the difficulty of making money in this market. I'm sure others can identify with that. So, where are you looking right now? How does your portfolio look at the moment?
Yeah, I mean, we like the retail sector. We like technology. Real estate has been doing really well. Like if you take a look at IYR, I mean, everyone wants to get into real estate. Real estate has been just moving up and up and up, and so we're long real estate, and those are kind of the pockets that I really like. I mean, we're starting to see some other technology plays start to come to life, like the clean energy, like a clean energy or solar sector. Those are starting to come back to life. They were massive leaders last year. They took a huge haircut, fell out of favor for the last 6 or 8 months, and now they're starting to claw their way back up, and they're coming back to life. So, what were leaders last year are starting to show signs of leadership again. They're still far from hitting all-time highs and breaking out, but they're starting to come back to life, and there's some volume in there. So, I think if we do get this breakout in the Russell 2000, this next push higher in the stock market, I think the leaders of last year could actually come back again and become leaders of this year. So it's going to be interesting. The clean energy is something to keep your eye on. Like I think it's PBW is the symbol for that. And really another one real quick, just to touch on it, is actually the utilities. I've been talking about utilities for a while, the XLU, and how it's been outperforming the stock market for a couple of months. It's been doing really, really well. And this, utilities are a safe haven, kind of a defensive play for money when they're nervous. And so it's been a really strong sector. I think there's still quite a bit more upside in the utility sector. But again, if the stock market breaks and starts a big run, money will eventually come out of the boring utilities, and they're going to go back into the tech, into the solar, into those small cap speculative plays. So we really keep our eyes on the Russell to get an idea if you should be in speculative stuff or you should be in kind of defensive, like gold and utilities and consumer staples.
Okay, well, thank you for that. I remember from our previous conversations that for you, it's more important to follow the trends you see happening versus trying to make market predictions. So I wondered right now, if you're an investor or a trader, how can you best put that advice into action?
Yeah, I mean, you really do need to follow price. I'm a pure technical analyst, and I don't follow fundamentals or news. The reality is the only way we make money is if price moves in our favor. So, and it's not about trying to pick tops or bottoms, because that is a very dangerous game. So the key here is to follow price and follow it as close as you can for your style. If you're a long-term investor, you're gonna have certain characteristics you're looking for. As a swing trader, I mean, I like to look at what price is doing with the 5-day moving average, the 20-day, the 50-day, the 200-day moving averages. And I like to see the price making higher highs and higher lows. I like to see lots of sectors breaking out to new highs. We haven't been seeing that this year. A lot of sectors are just chopping around, not really showing a lot of commitment. A lot of sectors are actually in a downtrend while the stock market keeps making new highs every week. That's not a sign of strength. So we're very, very concerned. We're still long the market, but you do have to follow the trend. And no matter how much I think the market might have a big correction here, because I think it could happen at any day, you have to stay long with the trend, because this uptrend could go on for another 3 months, another 4 years. Who knows? No one thought we'd have a 10-year bull market. So you just got to stick with that trend and manage your money, your positions along the way by raising your protective stops in case it does roll over. You need to get kicked out of it to lock in gains. You need a game plan. So money management comes into a big key of kind of being successful in the markets.
For sure. And as we wrap up, you were telling me offline about your Early Start program, which you're launching right now. Would love to hear a little bit more about that and what it involves.
Sure. Yeah. So I'm launching a program called Early Start, and I'm doing this with the team. And what we spell it early as in an URL, a website URL. And we're helping children build their first micro website business. So it's a one-page website. It could be something like a physical product that they make or bake or create, or They could do lawn maintenance and lawn cutting, dog walking for a summer job, or they could actually sell some type of digital book or guide that they want to create. But we show these kids how to become their own boss and how to build a web page, how to share it on their parents' social media if they have their own social media as well, and how to manage an email list. And these kids become their own little bosses. And my daughter's been doing this, and now she's teaching her friends how to build a web page. And it's super viral, and the kids just love it. They have business cards made up now, and it really opens their world to freedom. They're realizing, hey, I can just come up with any idea and put together a website. It took us about 26 minutes to build her web page. And the next morning she had sales. It was just absolutely amazing. It's almost like instant success for kids to get a taste of entrepreneurship, to create something out of nothing and turn it into an income stream that's theirs. They're passionate about it. And so we're just trying to help as many kids as we can do this and build up some multiple websites. Eventually they can build $1 million website, which is one of the things we're going to be doing early next year, is showing exactly how to build $1 million website from scratch in a niche, a section of the market that you've never been in. And so that's our goal, is to help kids come out of school blazing, sky's the limit for what they can do.
That's very cool. And I think it fits with that trend we've seen over the last year during COVID of more people entering the market to do some trading.
For sure. Yeah. Everyone seems to be migrating online. They want to trade to make money from home. And it's great. My daughter sees me on the computer all the time. So does my son. And so now when they come in, they can sit behind me on the computer and I can help them with whatever they're doing. They feel like they're now part of the team. Like they feel like they're doing an adults thing. Kids love to pretend they're adults, right? And they love to play with money, and they love to sell. They are passionate. And you try telling a kid what they can't do, or if a kid wants something, they just keep asking. They are the ultimate salespeople. So it's just great. Yeah.
Yeah, well, that's great. And hopefully we can get an update on that as you continue.
For sure.
For now, I think that's all from me. Thank you so much for being here online to talk about what's going on in the markets.
Yeah. Thanks, Charlotte. Always a pleasure. Anytime.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Chris Vermeulen.